Hello, everyone, and we must start off today's news with the death of a major crypto project, or what was a major crypto project that got a lot of headlines. It's called Friends.tech. It was kind of like a social, kind of like media betting platform thingy where you invested in, I guess, like certain social media, like memes or rumors or whatever. I didn't exactly know how Friends.tech worked, but it got to be really, really big, generated millions upon millions of dollars each day. Well, it's dead. It only generated $21 million or $21 yesterday. So it was effectively dead a long time ago, but they finally nixed it and it did rug pull. And they sent all the smart contracts to friends.tech to a null Ethereum contract where it cannot be gotten back. So it is basically dead. So essentially, it generated $21 in revenue in 30 days and it relinquished control of its contracts. And crypto community members have criticized the decentralized social media protocols team handling the project, but I think they were rug pulling all along. So on September 8th, the team behind the decentralized social media protocol, Friend.tech, transferred control of its smart contract to Ethereum's null address. So basically, no one controls the smart contracts anymore. They tried to put this off as decentralization and no one actually controls it anymore, but they're basically abandoning the project more or less. Anyone can see that. So on X, they posted admin and ownership parameters have been set to null address to prevent any changes to their fees or functionality in the future. So they're not really planning to develop it anymore. So they basically rug pulled and abandoned the project, probably sold all their coins as well. Despite this, the web client at friend.tech will continue to operate as usual. The team also clarified no fees from either the smart contracts or friend.tech currently go to the dev team multisig. But the coin did drop a lot more. It plummeted to over 47% in 24 hours, reaching an all-time low of 6 cents. While the team has not provided a clear reason for this move, Crypto Slate's analysis on-chain data highlights the platform's steep decline in popularity. No one is using the platform anymore, and they just wanted to bail on the project. That's why they did that. Since no one is actually controlling the smart contracts anymore, they don't really need to be on there. Of course, they launched last year on Coinbase's base, gained rapid traction, and people thought this was going to be the big new thing. I do remember doing like a specific video on this, but they are basically dead. In September 2023, the protocol's daily earnings actually surpassed Ethereum's. That's how big it got, but it was a flash in the pan, and it basically died soon afterwards, and its top keys fetch high prices. Around the period, the platform also raised an undisclosed seed round from crypto VC firm Paradigm. Obviously, that money is lost now. It was completely lightning, basically like flash in a pan. Basically, lightning only strikes once, and the hype soon faded as the platform struggled to maintain momentum. It faced several challenges, including SIM swap attacks and mismanaged plans to exit the base blockchain. They were going to make a friend blockchain. People criticized that. That never happened. So this was a very, very slow rug pull in motion. So the transactions basically continued to grow in August and September, peaked in October, and basically flatlined out. Afterwards, had a little bit of a revival in April. When crypto had a revival, but then died basically afterwards. Friend.tech's downfall drew widespread criticism from the crypto community, particularly regarding the team's handling of the project. I don't really think they had a plan. Like when it blew up and got super big, I think they just wanted to like make a lot of money and leave because that's what it sounded like. Calvin Shu, a core builder at Impossible Finance, voiced his disappointment, saying Friend.tech had become more of a lab experiment than a genuine social finance project. Obviously, like I just think it was built on complete hype. Like when they explained it to me, I was like, I didn't think this would last either, honestly, because it didn't really make too much sense to me. He further expressed frustration of being rugged by the decision to shut down future upgradability, which in his view ended any hope for further development. I think it died a while ago, but basically they completely nixed it today, and there is zero hope at all for further development at this point. Similarly, Miko Atama, the CEO of Trading Strategy, added that Friend.tech was a prime example of monetizing hype and quickly cashing out, which is exactly what it was. So don't really blame them there. So Friend.tech is dead. Big rug pull. I think it went up to $266 million market cap last September, October, before the market actually completely took off. And now it's back down to like $6 million market cap or something, losing 97% of the value. So it was a pretty bad rug pull. So yeah, Friend.tech is dead. So be wary of such projects in the future. Wealth projects are adopting Bitcoin at a blistering pace. Basically, investment researcher Jim Bianco, who noted that 85% of Bitcoin ETF uptake is not from TradeFi institutions, but wealth advisors are adopting Bitcoin ETFs faster than any in history. They've already poured like $1.45 billion in. That's very little compared to the $46 billion, but the researcher failed to mention that it was only in August that wealth advisors were even allowed to basically bring up crypto ETFs. Despite them being approved in January, it took like half a year for that to come through. But the thing is, like, for 1 month, $1.45 billion isn't bad from crypto wealth investors. And like, there's data saying that like it only counts for a very small share of the crypto ETF inflows. And while that part might actually be true, the fact is, like, it's only been 1 month. If it had been like 6 more months, I do believe it would have been a lot more. Yes, there's 55% of all like wealth advisors who do not plan to bring up crypto or ETFs anytime in the foreseeable future, but that's 45% that don't say that. And there is a small percentage recommending crypto to clients, only 2.6%, but I do think that will grow. And I think 55% of RIAs will basically change their plans when the other 45% start to gain customers because crypto is actually doing well. Still, if you excluded all other flows and just looked at the 1.45 billion linked to investment advisors, IBIT would be the second fastest growing ETF launch this year out of 300 plus launches. So obviously the ETF launch was very successful. The Ethereum one, not nearly as successful as the Bitcoin one, but the Bitcoin one was really successful. And just after 1 month, you're already up in the billions of wealth advisors. I think some wealth advisors are still obviously holding back because they're still a little bit uneasy about recommending crypto. It is still kind of new, kind of this new thing, and they don't really want to be the ones that actually take the risk. That's very understandable, honestly. But compared to other ETFs, most other ETFs, they are being adopted by wealth advisors at a blistering pace. I think like after a couple of years when the ROI really comes through on the long-term investment status, I think they'll even more will actually recommend them because they'll like basically fall behind the others if they don't start mentioning crypto. It's a business, it's a dog-eat-dog business. If you're not doing as well as the other guy, people will actually move their money and you don't really want to lose their clients. So basically, like, even though 85% of Bitcoin ETF uptake is not from TradeFi institutions, the 15% that is pretty impressive, considering that TradeFi institutions have only really had a month where they could buy crypto. And right now is really not the FOMO period anyways, because crypto has been down a lot in the last couple of months. I think once the bull run hits, and now that TradeFi institutions are going to buy crypto, I think a lot more money will actually flow into cryptocurrency. So I'm actually like pretty positive on everything, and I don't really think they're putting this in a fair light. There's a leaked chain analysis video that suggests Monero transactions may be traceable, and obviously this is not very good for privacy advocates, because if Monero transactions are traceable, I don't know if any crypto transactions are untraceable. So a copy of a now deleted Monero tracing video was shared with Cointelegraph, so maybe the government finally got behind it, and it suggests that the firm can trace XMR transactions associated IP address. So maybe they'll actually have to change Monero, because they can trace your IP address. They can kind of determine where you're from. I guess you can use a VPN, but maybe they have a way to track that too. A leaked chain analysis video suggests that Monero XMR transactions could be traceable despite the privacy-preserving nature of the blockchain. The leaked video, which outlines the company's tracking methods related to the coin, has since been deleted. Chain analysis' potential ability to track XMR transactions raises worrying concerns, as Monero brands itself as secure, private, untraceable cryptocurrency that keeps your money confidential. If Monero loses that angle, there is absolutely no purpose for Monero to exist. I mean, it's already been delisted at a lot of big exchanges. I think Kraken still might have it, but that's its only attraction. It doesn't really have an ecosystem. And if it wasn't private, you could just use Bitcoin, like XRP, Cardano, or anything else. The fact that it's completely scrambled and untraceable means a lot of people want to use it. But if chain analysis had the ability to track Monero to the IP, then that brings Monero into question. Obviously, like I said, there is still the VPN stuff, but just the fact that they can track your IP with the Monero is not good news. And if you're wondering about the proof, they do actually have kind of like a screenshot right here, timestamp of the current TXID, transaction features box, broadcasting node, eliminated essays, stuff like that. And you can see like they can kind of, they can't, this is a copy of the leaked video kind of, and they can track the transactions supposedly. I can't really say it's 100%. I think we'll have to wait for confirmation, but I think the FBI and the IRS would be very interested in this. So can chain analysis track Monero IPs via its own malicious nodes? Images of the leaked video re-emerge on social media platform Reddit, posted by pseudonymous user u/LT. The user claims that the leaked video shows how chain analysis can track transactions back to 2021 via its own malicious Monero nodes. So obviously it looks like chain analysis has Monero nodes, and because they had Monero nodes, they can actually track it back. So obviously that leaves Monero kind of vulnerable. The user claims that, run a large number of XMR nodes from various geographical locations and ISPs to capture transaction IP address and timestamps. 2, transaction feed IP and everything from one or more popular wallets defaults nodes. Combined with the fake decoy inputs, this method can reduce anonymous transactions around Monero transactions, claimed the user. Cointelegraph approached Monero for comment, but had not heard back at the time of publication. Obviously, there's going to be some criticism directed at chain analysis, but chain analysis says they were just doing their job, which could make Monero more secure because they could actually fix this issue. So obviously, there's good and bad to this. So if they were trying to take advantage of this to kill Monero, don't think that will work. While the claims around Monero's transaction traceability could first seem alarming, investors have no reason to panic about the blockchain's privacy-preserving nature. This is because Monero transactions remain untraceable for most of the world except chain analysis, but chain analysis could actually delve that information to the government if they're very, very interested, obviously. So while the leak invited significant community backlash towards chain analysis Monero nodes, the on-chain intelligence firm is simply doing its job. Noted that they are just doing their job, tracing transactions on blockchains. No one says they can't run nodes that collect transaction IP info either. I think chain analysis are kind of like white hat hackers that make Monero more secure. So they could actually back this up and they could actually patch this problem, which would actually make it more secure. I want to talk about why I'm still bullish on TON. Yes, Durov has been arrested. That's definitely caused some problems. But I think Telegram is kind of working a little bit with regulators now. They're not still fully on board because there's Durov is still all about privacy, but he did actually change some of the TOS that Telegram has. I think that will actually help them comply with authorities, and I think he's going to have to upgrade his staff of moderators. And now I think he's going to pay a lot more attention when groups like associations and also governments send him requests, because now he's seeing that Telegram can definitely be affected if he just ignores everyone. India, South Korea, a lot of these big companies with big user bases want to ban Telegram, and he obviously doesn't want Telegram to be banned everywhere. He doesn't want to lose people to Signal or something like that either. So, he's going to do more content moderation. And I don't think that's going to scare a lot of people off of Telegram. It might scare some people off of Telegram, but they still have a large base of users. And these new clicker games they're doing, they're extremely popular. Not just Hamster Combat, but this Catizen thing too. And like we've said in previous live streams, they have 800,000 paying players, not just 800,000 regular players, but 800,000 paying players. They have 34 million. So people are actually spending an average of $33 per player on this, and that gets to be about $27 million revenue. They can put that back into actually promoting the game. And who knows how it can go from there. There might, like, Ton might actually be the blockchain for GameFi and just simple games that made popular, and that could like blow Ton up. Like, I think out of the top 10 coins that are below Solana, Ton probably has the best possibility of actually flipping Solana, because even though Solana's big and they've done a lot of things right in promoting their blockchain, they don't have the community that Ton has. They don't have the users that Telegram has, and that's where Telegram has a big advantage. So despite the legal issues and him being arrested, I still can see Ton doing very, very well in the bull run, just on the merit of how many users Telegram has. So that's the news for today. Let me know what you think. Like and subscribe, hit that bell notifications button. Thank you and have a nice day.